Good afternoon, everyone. My name is Cole, and we are DCC Consulting. And I want to start by thanking you all for the opportunity. I know it was a pleasure for myself and the team to be able to work on some of this analysis as well as navigating some of the potential strategic directions for Tesla. And so today we're going to walk through a little bit of analysis and then we're going to move into some near-term strategy recommendations that we have for you that could take place in the next year, and then we'll move to some longer-term recommendations that really over the next 5 years we think could be beneficial for Tesla. And so our purpose here is to provide a third-party perspective um, on the strategic direction for Tesla. So, starting with the mission and vision statements, what we found is that what Tesla does really well is innovate. And with the current mission statement being to accelerate the world's transition to renewable energy, we see that encapsulates a lot of what Tesla does well. And so we've provided a mission statement that more clarifies the industry that Tesla operates in, being the electric vehicle and the passenger automotive industry, as well as clarifying the consumers that Tesla serves, being mass market domestic consumers as well as international consumers. And for our vision statement, we've provided really 3 to 5 objectives and goals that we think that Tesla can either achieve or maintain over the next 5 years. And we believe that these objectives will further influence Tesla's retention as the world's leading seller of electric vehicles. Now, moving to our SWOT analysis, one of the key opportunities we found with Tesla is this global expansion. And even though the United States accounts for almost half of Tesla's worldwide revenue, we believe that the company has the resources to really dominate the EV industry worldwide, as long as you're willing to invest and expand the network of showrooms and partnerships you have in various countries. Now, for government incentives, the United States government has consistently supported the EV industry, and most notably in 2018, EV purchases increased by 70%, and that number has consistently increased year over year since then. And so, for some of the key threats that we found with Tesla, the main one would be supply chain disruptions. And following the pandemic, many companies face this with surging input costs and lockdowns in various countries. But we believe that if Tesla can strengthen its vertical integration and practice more cost effective production habits, then your company has the potential to combat this in the future. So, with increased competition, as the electric vehicle industry increases in size and grows, so do the amount of competitors, and there are currently 40 EV automakers in the industry, and so we're just seeing a gradual rise in the amount of competitors in the industry. Some of the key strengths we found with Tesla are a lot of your resources, and these are both proprietary and intangible. And these can include everything from your battery software, autonomous driving software, lithium ion batteries, and in gigafactories. But it also includes the intellectual property of the company and some of the brand equity in the market, where this leads into the market position because Tesla has the largest market share of any producer of electric vehicles. And while other brands have created electric vehicles, Tesla continues to remain somewhat synonymous with electric vehicles in the mind of these consumers. And that's a really beneficial and powerful thing to have as a company. Now, some of the key weaknesses we found as well, and we know that Tesla is moving towards more affordable offerings for their electric vehicles, but right now we see really the main weaknesses for Tesla being these production delays and product costs following the pandemic, getting back to a level of stability. These are the weaknesses we found with Tesla.
One of the big issues that Tesla is facing is production delays. Tesla has the opportunity to sustain a competitive advantage over its competitors while further differentiating itself from its gas-powered substitutes by increasing the scope of North American production capabilities. The threat of conflict between America and China, along with the insecurity of the elastic vehicle supply chain, leads us to believe that it may be beneficial for Tesla to focus its efforts on the North American and European markets. Analysts believe that factory upgrades could spark a rebound of deliveries in the fourth quarter of this year. They also believe this would allow Tesla to refresh their lineup with models that can compete stronger with Ford. We know that this would require expenditures during a time of high interest rates, but it is imperative to start now if you want to capitalize on the increased capacity in the future. If Tesla hopes to compete with manufacturers such as Ford and Toyota, they will need to price competitively. Tesla has the potential to utilize economies of scale to reduce prices to below $30,000. Producing vehicles in this price range would help Tesla compete with its larger and at times more reliable counterparts. As Tesla begins to produce vehicles that are more appealing to consumers with less fiscal flexibility, they will continue to hold a large market share in their market. Tesla will also benefit from an increase in charging infrastructure. In the event that America and China stop trade due to conflict, Tesla, along with the global economy, would fall into turmoil. As of now, Tesla heavily relies on China for the supplies used to manufacture their EV batteries and other production needs. As a contingency plan, the introduction of manufacturing in Vietnam and Indonesia can help keep costs low while further diversifying the supply chain. In the event that a sudden trade stop becomes an imminent threat, it may be beneficial for Tesla to consider gathering a surplus of lithium, cobalt, and other resources to hold them over until it can produce them in-house. These materials are vital to making Tesla's battery. This will provide Tesla with a level of protection against a supply chain dilemma, allowing production of EVs to be able to continue.
In this section, I'd like to take some time to discuss some of the long-term strategy recommendations for Tesla based on the information presented earlier. Our first strategy recommendation is to strengthen the North American charging network by adding an additional 50,000 superchargers within the next 5 years. As consumer demands for electronic vehicles continue to rise, we recommend that Tesla increase their presence of their superchargers. As of now, Tesla currently operates its superchargers in highly populated metropolitan areas and along major interstate highways. If Tesla can somehow bridge the gap in the amount of superchargers located across each state, it has the opportunity to eliminate a large amount of consumer concern regarding charging accessibility on longer drives. This in turn provides customers with a more consistent, enjoyable, and reliable driving experience, which will lead to helping Tesla gain a competitive advantage. Our next long-term strategy recommendation heavily focuses on Tesla's in-house lithium mining and refining operations. In recent years, Tesla has grappled with the scarcity of lithium, a vital component for battery manufacturing. We recommend that Tesla consider investing a significant amount of capital into opening more lithium refineries across the nation. Reports indicate that Tesla currently sources the majority of its lithium from China. Back in May of 2023, Tesla invested over $1 billion into a 1,200-acre lithium refinery located in the greater Corpus Christi area of Texas. We recommend that Tesla open up lithium refineries in states that have lithium deposits, such as Utah, Nevada, North Carolina, and Arkansas. Opening up these lithium refineries creates employment opportunities as well as allow for better control and stability over Tesla's supply chain and manufacturing. Our final long-term strategy recommendation is for Tesla to continue to optimize their EV battery technology and make continuous improvements to their user interface. Making continuous improvements and optimizations to Tesla's EV battery technology should be Tesla's top priority in order to gain a competitive advantage over the EV industry. We recommend that Tesla focus on reducing overall cost for consumers by optimizing their battery technology. A lower price point allows for Tesla to compete with traditional auto manufacturer pricing and makes it more accessible for consumers to get into the EV ecosystem. Advancements in battery technology means better performance for electronic vehicles in terms of mileage, energy efficiency, and dependability. One of the biggest advantages that EVs have over traditional vehicles is the ability to provide users with enhancements and updates to their vehicle over time, similar to a smartphone or a computer. Providing current customers with continuous UI improvements will help boost customer satisfaction.
When constructing a financial forecast for Tesla, it was really important for us as a team to go back and recognize how incredible it is for a company to receive 25 to 50% revenue growth year over year, while also realizing the reality that some of that will diminish. And so, as you'll see in 2023, we used some of the TTM numbers from this year. You'll notice that Tesla's cash flows were a little disrupted, and that's more so due to overall global economic conditions. But in 2024 and 2025, you'll notice that the net profit margin will decrease slightly. And this is due to our expectation of newer developments and securing of Tesla's supply chain while also improving vehicles as well. And so in 2024, you'll notice the largest decrease there as it slowly builds back up. And so in 2026, you'll notice that this is where really that substantial amount of revenue growth year over year is going to begin again. And this is really as we expect that new vehicles have been produced, newer, more efficient vehicles where consumers have a better idea of the product at hand, and overall infrastructure of the company will be more integrated. And then in 2028, you'll notice there's a larger jump as net income increases due to successful launches of these products, coupled with a balance of some more R&D expenses, which will result in an increase in revenue for that year. And lastly, we just want to thank you again for your time. This has been a pleasure for the team to work on, and it was very enjoyable for us to be able to analyze some ways that the Tesla may be able to improve in the future and may be able to foster more growth. And so we appreciate your time. We hope that our work and our analysis has helped provide a little bit more of a third-party perspective on some strategic directions that may be beneficial for Tesla. So thank you.